Hey guys, how are you? If you are new on my YouTube channel Moto Insurance, then please subscribe my channel and share it with your friends. So basically in this video I am going to tell you about vehicle insurance. So let's start our video. So here's it vehicle insurance from Wikipedia, the free encyclopedia. So here's it vehicle insurance, also known as car insurance, motor insurance or auto insurance, is the insurance for cars, trucks, motorcycles and others road vehicles. Its primary use is to provide financial protection against physical damage or bodily injury resulting from traffic collision and against liability that could also arise from incidents in a vehicle. Vehicle insurance may additionally offer financial protection against theft of the vehicle and against damage to the vehicle sustained from events other than traffic collisions such as skiing, weather or natural disasters, and damage sustained by colliding with stationary objects. The specific terms of vehicle insurance vary with legal regulations in each region. So here's it. Basically, history widespread use of the motor began after the First World War in urban areas. Cars were relatively fast and dangerous by that stage, yet there was still no compulsory form of car insurance anywhere in the world. This meant that injured victims would rarely get any compensation in a crash, and drivers often faced a considerable cost for damage to their car and property. A compulsory car insurance scheme was first introduced in the United Kingdom with the Road Traffic Act 1930. This ensured that all vehicle owners and drivers had to be insured for their liability for injury or death to third parties while their vehicle was being used on a public road. Germany enacted similar legislation in 1939 called the Act on the Implementation of Compulsory Insurance for Motorcycle Owners. So here's yet public policies. In many jurisdictions, it is compulsory to have vehicle insurance before using or keeping a motor vehicle on public roads. Most jurisdictions release insurance to both the car and drive. However, the degree of each varies greatly. Several jurisdictions have experimented with a pay-as-you-drive insurance plan, which utilize either a tracking device in the vehicle or vehicle diagnostics. This could address issues of uninsured motorists by providing additional options and also charge based on the distance driven, which could theoretically increase the efficiency of the insurance through streamlined collection. So let's see it, Australia. So let's see it. In Australia, every state has its own compulsory third-party CTP insurance scheme. A CTP covers only personal injury liability in a vehicle crash. Comprehensive and third-party property damage with or without fire and theft insurance are sold separately. First one is comprehensive insurance cover damage to third-party vehicles, other third-party property, and insured vehicle. Third party property damage insurance cover damage to third-party property and the vehicles, but not the insured vehicle. Third-party property damage with fire and theft insurance cover the insured vehicle against free fire and theft, as well as damage to third-party property and vehicles. Compulsory third-party insurance (CTP) insurance is compulsory in every state in Australia and is paid as a part of vehicle registration. It covers the vehicle's owner and any person who drives the vehicle against claim for liability for death or injury to people caused by the fault of the vehicle owner or driver. CDB may include any kind of physical harm, body injuries, and may cover the cost of all reasonable medical treatment for injuries received in the crash, loss of wages, cost of care service, and in some cases compensation for pain and suffering. Each state in Australia has a different scheme. Third-party property insurance or comprehensive insurance covers the third party with the repairing cost of the vehicle, any property damage or medication expenses as a result of a crash by the insured. They are not to be confused with compulsory third-party insurance, which is for injuries or death of someone in a motor crash. In New South Wales, each vehicle must be insured before it can be registered. It is often called a grey slip because of its color. There are five licensed CTB insurers in New South Wales. Suncrop holds a license for GIO and AMI, and Allianz hold one license. The remaining two licenses are held by QBE and NRMA Insurance, NRMA, APIA, and Shannons, and Insure My Right Insurance also supply CTP insurance license by GIO. A privately provided scheme also apply in the Australian Capital Territory from AMI, APIA, GIO, and NRMA. Vehicle owners pay for CTB as part of their vehicle registration. So here's it. Basically, in Queensland, CTB is included in the registration fee for a vehicle. There is choice of private insurer, Allianz, QBE, RACQ, and Suncrop, and price in government control. In South Australia, since July 2016, CTB is no longer provided by the Motor Accident Commission. The government has now licensed for private insurers AMI, Allianz, QB, and SGIC to offer CTB insurance SA. Since July 2019, vehicle owners can choose their ordered CTB insurers, and new insurers may also enter the market. There are three states and one territory that do not have a private CTB scheme. And Victoria, the Transparent Accident Commission provides CTB through a levy in the vehicle registration fee known as the TAC charge. A similar scheme exists in Tasmania through the Motor Accidents Insurance Board. A similar scheme applies in Western Australia through the Insurance Commission of Western Australia (ICWA). Australia, then Northern Territory scheme is managed through the through Territory Insurance Office (TIO). Asia, Bangladesh, and Canada option is also provided here. Basically, this is all about the vehicle insurance. So if you like my video, then please subscribe it and share it with your friends. Thanks for watching this video.